Hello guys, on this video I'll be teaching you about US 2-year Treasury Yield like I talked about US 10-year previously. So this is US 2-year. I'll still be discussing about the difference between US 2-year and US 10-year Treasury Yield. US 2-year is the interest rate investors demand to lend money to the US government for 2 years. So it is basically the market real-time expectation of where the Fed fund rate will be over the next 1 or 2 years. So this always talk about what the rate expectations. Why is the 2-year yield so important? It is important because it is the most sensitive to Fed speech, inflation data, job data, and rate hike or rate cut expectations. So whenever traders say market is repricing Fed, they're actually telling you that the US 2-year yield is moving. So whenever it moves, market reprices. Whenever it moves, market reprices. That is why it's very important. And what makes US 2-year yield different from 10-year is because 2-year is monetary policy expectations being driven by Fed. So you talk about the monetary expectations, the expectations whether the Fed is going to hike rate or ease rate. Then why 10-year talks about long-term growth of economy, inflections of economy, and what investor confidence. So whenever 2-year yield is rising, it's telling you that Fed is expected to hike rate. And whenever 2-year yield is falling, it's telling you that Fed is expected to ease rate. And how 2-year yield affect the forex, which is USD. Whenever the 2-year yield is rising, it means that USD interest rates are becoming more attractive. Investors are moving money into the USD asset and USD strengthens. So whenever US 2-year is rising, USD rise. Whenever US 2-year is falling, USD is weak, USD weakens. So the key insight is that this 2-year yield is like a Fed expectation chart. If you notice that CPI comes out and it comes out hotter, which is above the forecast, above expectation, and you notice the 2-year yield spike up, this telling you that USD is bullish. You should be looking for a bullish opportunity on the USD. But if CPI comes out weak and you notice the 2-year yield drops during that news impact, this is telling us that USD is bearish. You should be looking for a bearish opportunity on the USD. That is why the macro traders, they monitor this 2-year yield like a weapon. So this is a brief video of US 2-year yield explaining to you what is it, how to use it and discover your buyers, and the difference between US 2-year and US 10-year yield. So if you have any question, you can drop it on the comment section, all right? And if you want to join my community, you can use the link in my bio to join my Telegram community and subscribe to the channel, all right? Take care and bye for now.